Welcome back to TalkTickers, where we break down earnings calls so you don't have to.
You got it.
Today we're diving deep into Stratasys Q4 2024 earnings call. And, well, let's just say there's a lot to unpack here.
Yeah, what's fascinating here is that while the initial numbers, might look a bit underwhelming, I think, there are some seriously intriguing details beneath the surface.
Okay, so let's give our listener a quick overview.
Yeah.
Revenue came in a bit lighter than expected at $150.4 million for Q4, down 3.8% year over year.
Right.
For the full year, it was $572.5 million, an 8.8% dip.
Okay.
Or 6.9% if we exclude that Stratasys Direct Service Bureau divestment.
And that divestment is a key detail to keep in mind when comparing year-over-year figures.
Right.
It can skew the perspective a bit.
Right, but here's the thing.
Right.
While revenue was down, profitability actually went up.
Interesting.
They delivered a 49.6% adjusted gross margin for the quarter and 49.2% for the full year.
This profitability surge is a big deal because, it shows Stratasys is focusing on operational efficiency.
Right, which is crucial in an uncertain economy like this one.
Exactly. And their operating income landed at $9.4 million for the quarter and $4.9 million for the full year.
Mm-hmm.
Plus, they posted an adjusted EBITDA of $14.5 million for the quarter.
Okay.
A 9.6% margin.
Now, that 9.6% adjusted EBITDA margin is particularly remarkable given the current market conditions, right? It suggests they're managing costs well and squeezing more profit out of each dollar of revenue.
Okay.
For those unfamiliar, adjusted EBITDA helps us understand the core business profitability by stripping away one-time costs.
So you're saying that even though revenue is down, they're actually becoming more profitable? That seems counterintuitive.
It's not necessarily counterintuitive, no.
Okay.
It could indicate a shift in strategy.
Okay.
Perhaps focusing on higher margin products or services, or even streamlining their operations to cut costs.
Okay, that makes sense.
Yeah.
And it's worth noting that they have a strong cash position, $150.7 million with zero debt.
Mm-hmm.
Plus, they're expecting a $120 million investment from Fortissimo Capital to close in Q2.
Yeah, that cash on hand gives them a lot of flexibility, especially in a volatile market like this.
Right.
It could be used for strategic acquisitions, research and development, or even just to weather a prolonged downturn.
Oh. All right, so we've got the headline numbers out of the way.
Yeah.
Now let's dig into the details, starting with that revenue breakdown.
Great.
Product revenue was down 4.8% to $46.1 million in Q4.
Within that, systems revenue dipped 1.5% to $46.7 million.
Okay.
This suggests companies are holding back on big investments in new equipment, likely due to economic uncertainty.
Mm-hmm.
But it makes Stratasys' strong consumables performance even more impressive.
Speaking of consumables, that revenue was down 7.3% to $58.4 million.
Okay.
That seems a bit odd, considering they have a growing installed base, doesn't it?
It does seem counterintuitive, and it's
Yeah.
definitely something to keep an eye on moving forward. Right. However, the CFO emphasized that Q4 was an outlier and not representative of a broader trend.
Okay.
In fact, they expect full year 2025 consumables revenue to exceed 2024, which was already higher than 2023. So utilization is actually increasing. That's a good sign.
Absolutely. It means their existing customer base is using their systems more.
Okay.
Which is a positive indicator for future consumables sales and long-term growth.
Oh, good to know.
Yeah.
Now, service revenue held steady at $45.3 million.
Right.
Not much to report there, but at least it didn't decline.
Yeah, stability in service revenue can be a positive sign, particularly when other segments are facing headwinds.
All right, so we've covered the financials.
Mm-hmm.
Now let's talk about what the CEO, Yoav Zyfe, had to say.
Wait.
He seemed remarkably optimistic despite the top-line weakness.
Right.
What was his main message?
Yoav kept highlighting the long-term potential of additive manufacturing.
Okay.
Specifically, things that only 3D printing can achieve.
Like what? Give our listeners some examples.
He emphasized the ability to create low-volume, highly customized parts with complex geometries,
Right.
which traditional manufacturing methods struggle with.
Mm-hmm.
He also highlighted 3D printing's role in improving supply chain resilience, enabling companies to produce goods locally and reduce their dependence on global networks.
So he's essentially saying that even though the market is focused on short-term challenges, the fundamentals of additive manufacturing remain strong.
Precisely.
Okay.
He believes that while companies might be delaying big investments right now, they are still very much engaged with the technology and recognize its transformative potential.
It's like they're playing the long game here, betting that as the economy recovers and supply chain concerns persist, demand for 3D printing solutions will only increase.
That seems to be their strategy.
Right.
And it's not an unreasonable one.
Okay, so they're confident about the future of additive manufacturing.
Yeah.
But where are they seeing success right now? What specific areas are they focusing on?
They're seeing good traction in several key verticals, including aerospace and defense, tooling, and perhaps most notably, dental.
Wait, dental? 3D printed teeth. Tell me more about that.
They've developed a new denture solution that's creating a lot of buzz.
Okay. It's
poised to disrupt the massive denture market, which is worth billions of dollars globally.
Denture's going high tech. I have to admit, I'm intrigued.
Yeah, it's a fascinating development.
Okay.
We'll delve deeper into that in a bit.
Okay.
But first, let's talk about their guidance for 2025.
Okay.
They're projecting revenue between $570 million and $585 million.
Okay.
With sequential growth each quarter and a stronger second half.
So they're baking in some continued softness, but still aiming for growth.
Mm-hmm. Interesting.
What about profitability?
They expect profitability to continue improving, which again is impressive given the economic environment.
It sounds like they're walking a tightrope here.
Yeah. Acknowledging
the current headwinds, but remaining optimistic about their ability to navigate them and deliver growth.
Yes, it's a delicate balance.
Right.
They're clearly aware of the challenges, but are banking on their pipeline visibility and the anticipated improvement in macro conditions to drive their performance.
It almost feels like they're setting themselves up to potentially outperform if the market recovers faster than expected.
Right.
It's a classic under-promise, over-deliver strategy.
Yeah.
But what stood out to you the most in this section of the call?
Honestly, it was the recurring theme of customer engagement.
Okay.
Despite the economic uncertainty, Yoav emphasized that they're seeing strong interest and continued engagement from leading companies across various industries.
So it's not just hype. There's real demand for their solutions, even in a challenging market.
Exactly. That's a key takeaway for you, listener.
Right.
This suggests that Stratasys is not just selling a product. They're building a loyal following of early adopters who are actively pushing the boundaries of what's possible with 3D printing.
Okay, we've covered a lot of ground already.
Yeah.
But before we move on to the denture disruption, let's circle back to that consumables dip for a moment.
Okay.
What did the CFO, Eaton Zamir, have to say about that?
He stressed that Q4 was an anomaly, not a sign of a declining trend.
Okay.
In fact, he expects full year 2025 consumables revenue to be higher than 2024.
That's a bold statement. Given the initial dip, why is he so confident?
He pointed to the fact that their installed base is actively using their systems, which is reflected in the overall increase in consumables revenue year over year.
So the dip in Q4 was likely due to some temporary factors rather than a fundamental shift in customer behavior.
That's the takeaway, yes. And it's important because it suggests that Stratasys' revenue stream from consumables is not only stable, but poised for continued growth in the long run.
All right, that's reassuring.
Yeah.
Now let's shift gears and talk about this denture disruption you mentioned.
Okay.
It sounds like a potential game changer for Stratasys.
It absolutely could be.
Yeah.
They're tapping into a massive market with their new Trudent resin, which is designed for creating something called monoblock dentures.
Monoblock dentures? Yeah. What are those and why are they so special?
Traditional dentures are typically made in multiple pieces, which can be time-consuming and expensive to produce.
Right.
Monoblock construction, on the other hand, allows for a single-piece denture, streamlining the process and making it more cost-effective.
So it's all about efficiency.
Efficiency is a big part of it, yes.
Okay.
But there's more to it than that.
Okay.
Trudent resin also enables incredibly high aesthetics, meaning these dentures can look incredibly natural. And let's be honest, for patients, that's a major consideration.
Right.
No one wants their dentures to be obvious.
Makes sense. So we're talking about dentures that are easier and cheaper to make and look more natural.
Exactly.
What's not to love?
And there's another interesting aspect to this, the potential shift in the business model.
Okay, I'm listening. How could 3D printing change the way dentures are made and sold?
Right now, getting dentures typically involves multiple appointments, fittings, adjustments.
Right.
It can be a real headache for both dentists and patients.
I can imagine.
This new 3D printing solution simplifies the process, potentially reducing the number of visits required. Dentists can see more patients, and patients spend less time in the chair. It's a win-win situation.
Less hassle, more smiles. I like it.
Exactly.
But is the dental industry ready for such a radical change?
They're actually more prepared than you might think. The dental industry is already familiar with 3D printing technology. So the adoption curve for this new solution could be much steeper than in other sectors.
So they're not starting from scratch. They're building on an existing foundation of knowledge and experience.
Exactly, and that gives Stratasys a real opportunity to become a dominant player in this space, especially as this technology gains traction.
It's like they found this perfect niche where their expertise in 3D printing aligns with a massive market that's ripe for disruption.
That's a great way to put it.
Yeah.
They're in the right place at the right time with the right technology.
All right, so we've got the exciting potential of the dental market, but let's zoom out a bit.
Okay.
What are some other key takeaways from this call that our listeners should be aware of?
One thing that stood out to me was their emphasis on software and materials.
Okay.
They see these as key drivers of future profitability.
Why is that?
Well, think of it like the razor and blades model.
Okay.
You sell the printer, the hardware, then you keep selling the materials, the consumables, and software to support it.
Okay.
It creates a recurring revenue stream that's less susceptible to economic cycles.
Ah, I see. It's a smart strategy for long-term growth and stability.
Exactly. And they've already taken steps in this direction with their new GrabCAD IoT platform.
What does that do?
It provides customers with real-time data on their 3D printers, enabling predictive maintenance, streamlined support, and improved utilization.
So they're not just selling hardware, they're building an ecosystem around it to enhance the customer experience and generate recurring revenue.
Precisely. And this ties back to their focus on profitability. By making their printers more reliable and easier to use, they reduce downtime and increase customer satisfaction.
Right.
Which ultimately leads to higher consumables, sales, and software subscriptions.
It's all connected. They're thinking long term, focusing on building a sustainable business model that can weather economic storms and deliver consistent value to both customers and investors.
That seems to be the overarching message of this call, yes.
All right, so we've covered a lot of ground here.
Yeah.
We've talked financials, growth strategies, dentures, software, and more. It's clear that Stratasys is a company in motion, navigating a complex and dynamic market.
For sure.
But now for the fun part.
The moment you've been waiting for?
It's time for not financial advice, but trade ideas.
All right.
What kind of wild but not impossible trade can we cook up based on this call?
All right, let's put on our speculative hats and brainstorm.
Okay.
How about this? The 3D printing SPAC attack.
Ooh, that sounds aggressive. What are we attacking?
Remember all those SPACs that popped up a few years ago promising to revolutionize industries?
Yeah, a lot of them fizzled out, didn't they?
Many did, but there are still some out there sitting on piles of cash, searching for a target company to merge with.
Okay.
Our play here is to find a SPAC with a strong management team.
Okay.
A solid track record, and a focus on disruptive technologies.
Okay, so we're being picky.
Exactly. We want one that understands the potential of 3D printing.
Right.
And ideally has some experience in manufacturing or related fields.
So we find our SPAC, then what?
We take a position in the SPAC, betting that they'll identify a promising 3D printing company, maybe even Stratasys itself, to merge with.
Ah, so we're playing the rumor mill game.
Right. SPACs are known for generating buzz when they announce a potential merger target.
Yeah.
If we can get in early before the hype train leaves the station, there's potential for significant upside.
But this is highly speculative, right? We're basically betting on a hunch and some market chatter.
It is speculative, yes.
Right.
There's no guarantee that any particular SPAC will choose a 3D printing company or that the merger will be successful. Right. This is a high risk, high reward play.
Not for the faint of heart, that's for sure.
Definitely not.
Yeah.
But if we do our due diligence identify a SPAC with the right ingredients and get lucky with the timing, the payoff could be substantial.
Yeah. Okay, I see the appeal. It's like a lottery ticket with a bit more logic behind it.
That's a good analogy.
Yeah.
And it's important to remember that this is just a thought experiment, not actual financial advice.
Right.
Do your own research before making any investment decisions.
Wait till you get advice.
Yeah.
All right, that's it for part 1 of our deep dive into Stratasys Q4 2024 earnings call.
Okay.
We've covered a lot of ground, but there's still more to come.
There is.
Stay tuned for part 2, where we'll go even deeper into the denture disruption and explore the competitive landscape of the 3D printing market.
Looking forward to it.
We'll be back soon.
See. Welcome back to TalkTickers.
We're continuing our deep dive into Stratasys Q4 2024 earnings call.
Picking up where we left off, let's delve deeper into that denture disruption we touched upon.
All right, so we know Stratasys is making waves in the dental market with their Trudent resin and this whole monoblock denture concept.
It's a fascinating development because it's not just about using 3D printing to create dentures.
Right.
It's about reimagining the entire process, you know?
You mentioned a potential shift in the business model.
Yeah.
What exactly does that look like?
Well, imagine a world where getting dentures is no longer a multi-appointment ordeal.
Okay.
With 3D printing, the process could be streamlined, potentially reducing the number of visits required.
That would be a huge win for both patients and dentists.
Absolutely. Dentists could see more patients, boosting their efficiency and potentially their revenue.
Right.
And patients wouldn't have to endure the hassle of multiple appointments and lengthy fitting processes.
Less time in the dentist chair. Yeah. Sign me up.
Exactly.
Yeah.
But beyond the efficiency gains, there's also the aspect of personalization.
Oh, right. We talked about the Trudent resin allowing for incredibly natural-looking dentures.
Yeah.
How does that tie into personalization?
Well, imagine being able to customize the shape, the color, even the texture of the dentures to perfectly match the patient's anatomy and preferences.
That's taking customization to a whole new level.
And it's all made possible by 3D printing technology.
Wow.
Stratasys isn't just creating dentures, they're creating bespoke dental solutions tailored to the individual.
So it's not just about convenience and efficiency.
Right.
It's about creating a better patient experience overall.
Exactly. And that's a key differentiator in a competitive market like dental care.
Okay, but let's be realistic for a moment.
Yeah.
Dentures have been around for centuries.
Right.
Is the industry really ready to embrace such a radical shift in how they're made?
That's a valid question.
Yeah.
But remember, the dental industry is already familiar with 3D printing.
Right.
It's been used for creating crowns, bridges, and other dental appliances for years.
So it's not like they're introducing a completely foreign concept.
Right. The technology is already there, and dentists are comfortable using it. It's more about adapting the technology to a new application and demonstrating its benefits.
And those benefits, like increased efficiency, personalization, and patient satisfaction are pretty compelling.
They are, and that's why I think this denture disruption has the potential to be a real game changer for Stratasys.
If they're not the only player in the 3D printing space, right? What's the competitive landscape look like?
It's a growing market with several key players.
Okay.
You have companies like 3D Systems, HP, and Desktop Metal all vying for a piece of the pie.
So Stratasys is facing some stiff competition.
They are, but they also have some distinct advantages. Their long history in the industry, their focus on specific verticals like dental, and their growing ecosystem of software and materials all give them a competitive edge.
It sounds like they're positioning themselves as a leader in the space.
Yeah.
Not just a follower.
That's a good assessment.
Okay.
They're not trying to be everything to everyone. They're focusing on areas where they have expertise and can differentiate themselves through innovation and customer service.
Smart strategy.
Yeah.
Now, going back to their emphasis on software and materials, how does that fit into the broader picture of the 3D printing market?
It's actually a key trend in the industry as 3D printing moves beyond prototyping and into full scale production. The importance of software and materials is only going to increase.
Why is that?
Well, think about it. To create high-quality functional parts using 3D printing, you need more than just a printer. You need sophisticated software to design and optimize those parts. And you need specialized materials that can meet specific performance requirements.
So it's not just about the hardware anymore.
Right.
It's about the entire ecosystem surrounding the technology.
Exactly. And that's where Stratasys is making strategic moves.
Right.
They're investing in software development, expanding their materials portfolio, and creating an integrated platform that connects design, production, and maintenance.
So they're not just selling printers, they're selling a complete solution.
Right. They're building a value chain that goes beyond the initial hardware sale. And that's a smart move for long-term growth and profitability.
Okay, so we've got this fascinating convergence of factors.
Yeah.
The growing adoption of 3D printing, the increasing importance of software and materials, and Stratasys' strategic positioning within this dynamic market. And let's not forget the denture disruption.
Oh, yeah, that's a big one.
Right.
If they can capitalize on that opportunity, it could be a real game changer for their business.
Agreed. It's a perfect example of how they're leveraging their expertise to tap into high growth markets and create new revenue streams.
It's like they're playing a multi-dimensional chess game.
Yeah.
Making strategic moves across different areas of the 3D printing landscape.
That's a great analogy.
Yeah.
They're not just reacting to market trends, they're actively shaping the future of the industry.
All right, so where do we go from here? What's next in our deep dive?
In part 3, we'll wrap up our analysis by exploring some potential risks and challenges that Stratasys might face, and we'll unveil our final, not financial advice, trade idea.
Ooh, I can't wait to hear what you've come up with.
All right.
Stay tuned for part 3. Welcome back to TalkTickers.
We're wrapping up our deep dive into Stratasys' Q4 2024 earnings call. Yeah, we've covered a lot of ground from their financials and growth strategies to that exciting potential of the denture disruption,
right?
And their strategic focus on software and materials.
But no deep dive would be complete without considering the potential risks and challenges.
Okay, every investment comes with risk,
of course.
So what are some things that could potentially derail Stratasys' growth trajectory?
Well, one obvious risk is the macroeconomic environment.
We've talked about the current economic uncertainty and how it's impacting capital expenditures.
Exactly. If the economy were to take a turn for the worse, or if the recovery is slower than anticipated, it could further dampen demand for 3D printing solutions.
Companies might delay investments even longer or even scale back their operations, which would directly impact Stratasys' revenue.
Precisely. And remember, their guidance for 2025 is based on the assumption of a gradual economic recovery.
Right.
If that doesn't materialize, they might need to adjust their expectations.
Okay, so macroeconomic headwinds are a real concern.
Yeah.
What else?
Another risk is competition.
We talked about the growing number of players in the 3D printing market, each with their own strengths and strategies.
Exactly. The competition is only going to intensify.
Right.
And Stratasys will need to constantly innovate and differentiate themselves to stay ahead of the curve.
They can't afford to rest on their laurels.
Right. They need to keep pushing the boundaries of what's possible with 3D printing, whether it's, developing new materials, enhancing your software capabilities, or finding new applications for the technology.
So innovation is key to their long-term success.
Absolutely. And that brings us to another potential challenge: execution.
What do you mean by that?
Well, they have a lot of ambitious plans, from expanding their dental business to building a comprehensive software ecosystem.
Their success depends on their ability to effectively execute those plans.
Exactly. It's one thing to have a great strategy, but it's another thing entirely to implement it effectively.
They need to ensure they have the right people, processes, and resources in place to deliver on their promises.
Right. And they also need to be adaptable and responsive to changes in the market.
The 3D printing landscape is constantly evolving, so they can't afford to be rigid or complacent.
Agility is key.
Right.
They need to be able to adjust their strategy as needed, embrace new opportunities, and navigate unforeseen challenges.
Okay, so we've got macroeconomic headwinds, competitive pressures, and the challenge of execution.
Yep.
Those are some pretty significant risks.
They are, but it's important to remember that every investment carries some level of risk. Right?
And Stratasys is operating in a dynamic and rapidly growing market, which inherently comes with both risks and opportunities.
Exactly. It's a balancing act. Investors need to weigh the potential rewards against the potential downsides.
All right, well, we've covered the risks. But before we wrap up, I think our listener is eagerly awaiting our final not financial advice trade idea.
Yes, the moment you've all been waiting for.
Hit us with it.
All right, for our grand finale, we're going with a bold one. We're calling it the Stratasys supply chain squeeze.
Ooh, that sounds intriguing. What's the idea?
Well, remember how Stratasys is positioning itself as a solution to supply chain vulnerabilities.
Right. They're emphasizing the ability of 3D printing to enable localized production and reduce reliance on global supply chains.
Exactly. Our trade idea is to capitalize on this trend by creating a basket of companies that stand to benefit from a reshoring wave.
Okay.
With Stratasys as the centerpiece.
So we're not just betting on Stratasys, we're betting on the broader trend of companies bringing manufacturing back home.
Precisely. Think about it. As geopolitical tensions rise and supply chain disruptions become more frequent,
right,
companies are going to be increasingly motivated to find alternative solutions.
And 3D printing offers a compelling alternative, allowing companies to manufacture goods closer to their customers, reducing lead times and transportation costs,
right,
and mitigate the risks of relying on overseas suppliers.
Exactly. So our Stratasys supply chain squeeze basket would include not only Stratasys, but also companies involved in logistics, automation, and even raw material sourcing.
So we're creating a diversified portfolio that captures the multifaceted nature of this trend.
That's the idea. It's a high conviction thematic play that bets on a fundamental shift in the way companies think about their supply chains.
Risky, but potentially very rewarding if this reshoring trend takes hold.
Absolutely, but remember, folks, this is not financial advice.
Right.
It's just a fun thought experiment.
Do your own research, consult with your financial advisor,
yeah,
and make informed decisions based on your own individual circumstances.
All right, that wraps up our deep dive into Stratasys Q4 2024 earnings call.
We've covered their financials, growth strategies, competitive landscape, potential risks and challenges.
Yep.
And even cooked up some wild trade ideas.
Hopefully you enjoyed it.
We hope you found this deep dive informative and engaging.
Yeah, and as always, remember, we're just two podcast hosts sharing our thoughts and observations.
We encourage you to do your own research, stay informed, and make investment decisions that align with your personal goals and risk tolerance.
That's right.
Thanks for joining us on TalkTickers.
Until next time, keep those tickers talking.